this practice exercise, we're going to be talking about a multiple product break-even point calculation. So this is just a generic example of a type of problem you might see with this. What happens generally is they'll tell you that they have 2, 3, 4, maybe more products, and they'll give you information like the selling price and the variable cost. They may even calculate the unit contribution margin for you. If they don't, the very first thing you're going to need to do is calculate the unit contribution margin for each product type. Now, of course, unit contribution margin is just the selling price minus the variable cost. And by the way, if they give this to you in the unit format, then we can do the break-even point in units. If they give this to you in the total sales format, and they don't give you a per unit amount, then we have to use the break-even point in dollars, and we would instead need to get a unit contribution margin ratio. And that is just the contribution margin, whether it's an individual amount or a total amount, divided by the sales, again, whether it's unit or total. So just as a quick calculation there, if I took 45 divided by 175, this particular unit has a contribution margin ratio of 25.7%. Again, that's only needed really if you don't have unitized data. It's easier generally to calculate all of this based on a per unit amount, and they give us the per unit amount here, so we really don't need the contribution margin ratio. We're going to take it in its simple form with the per unit amount. So they give us 3 different products, and you can see each one has a different mix of costs and sales price, so a different contribution margin. Now, break-even point, what they're going to tell us is they have a combined fixed cost for the entire company, and it's $275,000. If we normally had the break-even point, just a one-product calculation, we would be taking the fixed cost of $275,000 divided by the unit contribution margin of $45, and let's just do that. Let's just say we just had one product. That would tell us that for just the beginner, if that's all we had, we would actually need to round up. You always round up with these break-even point calculations, so it would be 6,112 units to break even. That's what we would need, but the problem is that's not the only product we have. We have 2 other products, so it becomes a little bit more challenging with this type of problem, because what do you divide it by? 45, 70, 80? Do you just take a straight average of the 3? And the answer is neither. You have to take a weighted average contribution margin. So what do we mean by weighted average? That is where the sales mix comes into play. And they're giving us the sales mix here. It says this company sells 3 beginners for every mid-level and 5 mid-levels for every master. So that seems a little complicated there at first. Now, different problems will give you this sales mix in a different way. They might give you total units sold for each of the 3 products, and then you can just calculate a weighted average that way. But they didn't here. They gave it to us in a narrative format. So that's actually going to be our first step, as we'll see in just a bit, and I'll show you how to calculate that. And the ultimate goal of this problem is how many of each individual product should be sold at the monthly break-even point. Now the thing is, I give you steps to go through for this as you're doing the practice, but generally the problems are going to stop right here. They're not going to give you these hints. So we're going to use these to be aware of how you need to calculate this, what order you need to go through for this. The first step, if they don't already give it to you, has to be to calculate the sales mix for each product. So they told it to us in narrative format, but that doesn't do us any good. We need some sort of percentage or a fraction. So what we're going to do here, we're going to set up these 3 labels, and we're going to try to interpret this narrative. It says 3 beginners for every mid-level, 5 mid-levels for every master. So what this is telling us is the master is the smallest unit. It's the lowest sales. We're going to start there. We're going to say one master. What happens if we just sell one master? We'll sell 5 mid-levels. 5 mid-levels for every one master. For every beginner or every mid-level, we sell 3 beginners. So if we sell 5 mid-levels, we sell 3 times that much, which is 15. So this is how we would calculate our sales mix. Now what we need to do is get a total of these 3. This is kind of a package. Sometimes you hear this referred to as a break-even package. So 21. Now what we need here is to get a percentage for each of these 3 types. It's going to be 15 out of 21, and then 5 out of 21, and 1 out of 21. If we add these up, you'll see at the bottom here we get 100%, or 1.0. So this is our sales mix we're going to be using. Now the whole goal of this is we need to get a weighted average contribution margin, and the weighted average is the sales mix. That's how it's weighted. So let's take a look now. I'm going to copy some of this stuff down here. Actually, I'll add a line in here. Let's see. So I'm going to put the contribution margin from up above. Make sure I have them in the right order. Beginning, mid-level, and master. So it's 45, 70, 80. The sales mix was right here in that same order. I got to paste values so it pastes everything down. And then we're just multiplying the contribution margin for each unit by its corresponding sales mix. And what we're going to do now, once we get the weighted average contribution margins, we have to add all 3 up. So what this is telling us, this is really what we need. Notice we had 45, 70, 80, and we're certainly selling more beginners. So you would expect the weighted average to be closer, it'd be skewed closer to this beginning level by quite a bit. 52 is certainly much closer to the beginner than it is to either of these other 2. This is basically our weighted average contribution margin that we're going to be using. And we'll see where this comes in later on. But now let's take a look. We just need a simple break-even sales point calculation. So for the break-even sales point, the normal break-even, as we did up above, I guess I deleted it by now, it's always fixed costs divided by a contribution margin. Our fixed costs here are $275,000, and the contribution margin is the weighted average contribution margin. That's what we want to use. So when we do that, we get a break-even sales point of 5,226.24 units. Remember, with break-even point, you always have to round up. No matter what, even if it's 5,226.001, you have to round up because you won't break even otherwise. So we're going to round this to 5,227 units. Basically, we're saying to break even, we have to sell 5,227 units. That's all there is to it. But the question is, what units? Do we sell 5,227 beginners, that many mid-levels, that many masters? And the answer is no, we sell a little bit of a mixture. So what we're going to do now is bring these back down, add a line in here. So what we're going to do is we're going to bring in the sales mix again. So the sales mix is going to be used again to determine how many of those 5,227 units go to the beginner level. So I'm going to put in, just down here, just trying to get a cell here, 5,227. So we're going to take 5,227 multiplied by the 71.429%, 5,227 multiplied by the 23.81%, and then that same number multiplied by 4.76%. If we add those three up, we come up with 5,227 units. Now, again, the thing here is you can't sell partial units. So what we'd really need to do for this answer to be proper is round each one up. We need to sell 3,734 units of this, 1,245 units of this, and 249 units of this. And interestingly, they all would have rounded up anyways. But even if it was below 0.50, we would still have to round up. So this ultimately is our answer that we're looking for. We've converted all this data. We know we need to break even. We've converted all this data into this number of units. So if we wanted to check it out, again, this is not necessarily a requirement of the problem, but we're going to check it just to make sure. So we're going to bring in our actual sales. And we're going to bring in, again, so we know we have the sales price, but we also know we subtract out the variable cost right away. So really what matters is the contribution margin. We have that up here somewhere. I guess we didn't. It was, yeah, we do, right here. Contribution margin, 45, 70, 80. So we're just trying to identify how much are we getting from all of these. So this is how much contribution margin each of these sales is making. And if we add this all together, we end up with 275,100 in total contribution margin. Now remember, our fixed cost was 275,000. So, of course, due to rounding, we're going to be just a little bit off. But the point is, this has to be at least, it has to be above zero. It shouldn't be all that much above zero, because rounding should just give you, I mean, it's not going to be $1 or $2. It's $100 in this case. But if it's negative, then we have not broken even and we did something wrong. If it's, let's say, $100,000, then there's obviously something wrong there as well. This is just a rounding difference. But the point is, it looks like we're in the right place. That's what matters here. So hopefully this exercise has helped to clarify how to handle these multi-product break-even point calculations. Now again, the problem may be given to you in different formats, but these are the pieces you need. If you follow these steps, some of which may have already been done for you in the problem, but if you follow these steps, you're going to make a break-even point calculation work for you. So thanks for your time today.